And I call on Deputy Derek Nolan.
Thank you very much, Chair. And just to welcome Mr. Corrigan and his officials to the committee this morning. I think it's fair to say that that the National Treasury Management Agency has assumed a role in Irish society that it probably hadn't foreseen it would have about 5 or 6 years ago. I think its name is well known, and it's certainly something that's very much in the public eye. I want to cover an issue that was in the C&AG's statement, the opening statement, regarding the transition management services on State Street. From what I understand from my reading of it, and it's a complex area, there was a decision taken in 2010 to liquidate some of the assets in the pension fund in order to use for investments in the bank, in the banking sector. In order to do that, you had a panel of basically managers of funds to transition them, and one of these was State Street, and they were responsible for 4.7 billion euro of funds, and you agreed a price for that of 698,000 euros. In October of last year, you wrote to State Street asking them to clarify the fee structure that had been paid based on reports. Why did you write to State Street at that time to ask them for further information?
Well, maybe, Chairman, if I could comment just generally in the first instance on the State Street transaction, just to put the transaction in context, and just to be clear on it, Chairman and Deputies, what happened here was fraudulent in nature and is totally unacceptable, and that's the view of the Commission which oversees the pension fund, and it's the view of the NTMA. And we have communicated this view regarding the fraudulent nature of these transactions very clearly and in unequivocal terms to State Street. I've personally met with the Vice Chairman globally of State Street, who came to Dublin to explain the circumstances and apologise for what happened. Nonetheless, State Street, in its performance of this transaction, fell well below what was expected of them. What happened here, as you say, Deputy, was that there was a decision taken to liquidate a sizable portfolio in connection with the recapitalisation of the banks. Again, as acknowledged in the Controller and Auditor General's statement, State Street were appointed from a panel of transition managers. Transition managers are managers who are specialised in dealing with large transactions to ensure that in executing those transactions you don't move the market against you. 4.7 billion by any definition is a big transaction. And as acknowledged in the Controller and Auditor General's report, they were clearly employed in an agency capacity. And to be clear about it, and I'm sure the committee is perfectly clear, nonetheless, an agent is somebody who's employed for a fee, who takes no position in the matter, and who passes straight back to the client the sale proceeds if the transition involves a sale. In this case, fraudulently, in our view, State Street, within State Street, there was 0.7% approximately clipped off the sale prices that they got when they went out onto the open market to transition these shares. To put it simply, Chairman and Deputies, if they realised €100 from a sale, only 99.93 of that 100 found its way back into the National Pensions Reserve Fund. I should add that this clipping, if I can describe it as such, applied not only to the National Pensions Reserve Fund, but applied to a number of other major clients which were being transitioned by State Street at the same time. We got an invoice in the agreed amount from State Street, and having verified from them that there was no commissions charged, we paid that invoice. It became apparent in late 2011 that there was an issue around the transition management arrangements in State Street. State Street wrote to us notifying us of this issue. We had already heard about it from press speculation, and in answer to your question, we then took it up with State Street.
So the first contact was from your side. State Street didn't come to you first?
No, the initial phone call was from our side. State Street say, and I have only at this point in time the bank's account of what happened, they were following up various internal investigations at the request of the UK FSA, which regulates them, and that any delay in notifying clients was accounted for by their attention to this internal investigation, which was requested by the FSA. But the first contact, to answer your question directly, was by us. Can I just say, Deputy and Chairman, that State Street have refunded us the amount which was improperly taken. But can I also say that we have taken that refund without prejudice. As far as we're concerned, the matter is not closed. This issue is being investigated by the FSA in the UK. As of now, we have only the ex parte account of the bank as to what happened, and we have reserved our position until we see where the FSA in the UK lands on this question.
Thank you for that. It was a very forthright answer, I have to say, which we don't normally get such forthright answers. You basically said that State Street, a company you hired, have defrauded the Irish state by 3.2 million euros, that you've got the money back, and that there's an investigation underway. Fraud is very specific. It implies that the word fraudulent was used. It implies it was intentional, that they knew what they were doing, that there was a premeditated plan to steal, or to engage in theft of money. Who's responsible for that? Was it a rogue person within the transition management team? Was it hired? Was it a company policy? Or what do you know?
Your question is an excellent one, if I can say so, in that certainly this was a fraudulent activity. The issue concerns the key issue here is whether, as you say, this was a relatively isolated incident, although it was perpetrated on other clients, but how high up in the corporate structure did this go, what are the governance and control implications, and what are the answers to those questions. We can't answer those questions, and that's why I refer to the FSA report. They are the regulator. We have written to the FSA to obviously formally establish our interest in their investigations. But we really have to wait, and that's the view we've taken. But I think it is important to stress again that we have reserved our position. We took the money which was inappropriately taken from the fund and reserved our permission.
You did say, however, that you've met with the Vice President of State Street.
Yes.
That he flew over to Dublin to talk
Yes.
to you. What reason did he give you? What was his explanation? He surely would have said his view as State Street. This is what happened. He would have surely allocated blame or responsibility or cause to somebody. What did he say to you?
The implication of what he said, because there are, as advised by him to me, there are legal proceedings between State Street and a number of people who exited State Street on the back of this issue. So he was quite guarded in what he said. But the implication of what he said was that the direction with respect to these improper reductions did not go high up in the corporate chain of responsibility within State Street. However, as I stressed, Deputy, this is an ex parte statement. I have no reason to doubt what the Vice Chairman told me, but I think a prudent approach is to await where the FSA lands on this issue.